Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 27th of August. So today we find ourselves at the start of the Jackson Hole Symposium, which is going to quieten down some of the moves on the majors in particular. But there is a little bit of rattling at some of these key points. So we'll jump straight into the markets and have a look at what we can identify for today's trading and early into next week. So we'll start out here on the Aussie USD. We can see that we've had a bit of a resurgence from the bottom where we were last week. It's pulled up to almost to the 20 moving average. I actually did mention this during the week that even if it didn't touch the 20 moving average, I'd be very conscious of the fact that it may reverse from this point. And in order to do that, like I said, although it didn't touch the 20 moving average, the ideal pullback point for this trade would have been all the way down, all the way up here, I should say, sorry, to the 73.20 area. But you know, it was showing signs that it may not get there, and the 20 moving average was right in the way. So in order to actually get involved in a potential trade like this, knowing that we're still definitely in a downtrend, there's no question about that, is going down to a smaller time frame like the 4 hour or the 1 hour. Now the 1 hour in particular is the one I was watching because all we were looking for was a lightning bolt change of trend at that level. We knew that it was starting to weaken, and that was around this area here. So if we actually got the little mini pullback, that's only a very small lightning bolt pullback, which is generally an aggressive one. And then when it did break down past the moving averages, it really showed an area where it could potentially be exposed to the short. Now, of course, we're about to get a 20-50 moving average cross on the 1 hour as well, and we've got the lightning bolt, albeit it is at a little bit of resistance now because this was, or support I should say, it was resistance through here, and you can see it was support here, resistance there. So it might find a little bit of support around this zone here, but it wouldn't surprise me to see it have a little bit of a mini pullback back to these 20 and 50 moving average crosses, test this little roll reversal area here. It's only a very small one, but yeah, the MACD's definitely crossed to the downside over here, so it wouldn't surprise me at all to see the Aussie shorten from this level. The obvious zone and the easiest zone to get is definitely the previous low. You know, if you aim for those sorts of things, that's the easy pickings. You know, long term, it's more than likely going to be aiming for the 70-cent mark, the Aussie. So, you know, it's probably got more in it, but in order to do that, of course, it has to get down to this level first, and there's not a lot of trouble. As you can see, there's a lot of very clear space from where it's shorting around this area here down to that. So that's the easy trade. So of course you can do two trades there. You can take one at that level and then you can aim for a bigger move with a second order at around this level. So yeah, for me, although it didn't reach the 20, it certainly gave me the signs that it wanted to turn around and reverse. So I did take notice of that. Now failing that, if we get a different scenario here where it does break above the moving averages again, for mine, the 1 hour has to actually close above the 72.80 in order for me to take this seriously for the long. If it does go long, all it's going to go to is to the area here around that 73.20 area. That's going to be the resistance point for it. It's going to have a lot of trouble getting past that level there. So yeah, for me, it's not a really great trade going up because there's not a lot of room, and you know there's a lot of resistance in front of you, whereas the short is a far more attractive trade. So I think even if it went above these moving averages, I think I'd just let the long go, and I'd only be aiming for my shorts on this one. So, you know, you can definitely, I mean, if you want to really scalp it, you can, but there is only a handful of pips there. You're only probably going to get 20 or 30 pips, if that, by the time it gets past all these areas and proves itself that it is going to go long. So the short is definitely the better trade in this scenario. We'll move on over now to the US dollar CAD. This one's had a bit of a resurgence. This is the daily. You can see here we had a big pattern, big evening star pattern here on the daily. Perfect, almost symmetrically perfect too. But I was very skeptical of this pattern, mainly because of the level that it landed on. The break of this pattern was at an extraordinarily strong roll reversal zone support and resistance, as you can see. So even though it did break through, it was always going to be a very difficult trade to actually get down to here, mainly because of that roll reversal zone. So I played this two ways. Initially, I did try and short it because what it did do on the 1 hour, you can see that it went up in perfect symmetry. When it did come down and broke through, I missed the initial break, and then I did short it off this level. And I was thinking that it was probably going to go a little bit shorter than it actually did, but I changed my mind when I saw this on the 4 hour, when it basically double bottomed on the 4 hour last night or late yesterday. Once it did this, it did convince me that it was actually turning around. So I actually closed that position and took the long because this was starting to set up. And I'll give you the clue as to what I saw. I knew at this point here that we were about to potentially have a double bottom, mainly because it reversed. On this candle here, still wasn't in, because even though it did technically double bottom, at this level, it was at a roll reversal zone. So I'm not going to be completely convinced that it's going to go long from there. But it's these two candles, that one in particular, that basically led me to believe that it was going to start to increase in strength. Because what happened here, I'll highlight it a little bit more. You can see that it actually tried to sell off again, right? For the 4-hour period, and this is an important period. We're talking about the European and US sessions here. So it wasn't like it was in the middle of Asia and nothing's happening. They absolutely tried to sell it off, and to the tune of the exact range of the previous candle. But the buyers quickly picked up momentum and basically closed it very similar to where it opened. So very, very strong reversal sign as it was. That convinced me to close the short that I had. It was almost break even, but at the very least, it got me to close it. At this point here, when the next candle did the exact same thing, showed even more indecision. It showed again that the sellers had a serious crack at getting it down, and when it failed to do that, it basically did. Now this one woke me up because it set me an alert and I had to actually get up and trade it, but it was an important one because I knew that the CAD had a little bit in it if we did get the right signal. So once I closed that one out, saw this, same candle. This is the important part. When you're looking at candle structure and you see that the sellers have tried to sell it off for a decent range and the buyers have picked up again and actually taken it very close to the close, regardless of the colors, don't pay any attention to the colors of these candles. They're exactly the same candle. All it shows is that the close was actually slightly above the open on this candle, and it was slightly below the open on that one, but only very marginally. The price action is what's important, and both price action movements on these two candles showed a very, very strong bullish move out of this double bottom. So once this candle closed, we were long, and this pattern's already played out. So basically, that double bottom is already finished. It was very, very good trading. I like this CAD. I think it's still got more in it. I mean, I think the 127.60 I did my Tuesday market watch on. That's probably the target for it initially anyway. And it's basically MACD's out of the histogram on the 4-hour, which is good. 1 hour lightning bolt, as you can see. Very good trading. So hopefully you're able to get a couple of pips on that. We had a very, very small short opportunity, but the longer opportunity here, the double bottom played out quite nicely. Unfortunately, it happened at a time where a lot of us are probably asleep, but I was lucky enough to get this one. So hopefully that explains why price action actually is a big key when you're actually trading a pattern, because it makes a big, big difference. At this candle here, still very, very skeptical about this pattern because it is at resistance. But when you see these two candles here, the sellers are definitely getting beaten down by the buyers twice in a row over an 8-hour period. That is a very, very important market move, and gives us a very, very big clue that this is more than likely a very high chance of happening. All right, we'll go over to the US dollar yen now. So this one here is still doing a whole lot of nothing. You can see that it's still basically sideways, has been so for several days now, and actually a couple of weeks. The moving averages are absolutely flatlining, completely. I think these moving averages might be smaller ones. No, they're 50 and the 20. I thought I changed them. You can see that they're basically flatlining, completely horizontal and overlapping each other. Of course, that's what you're going to get when the market is basically doing nothing. Still a little bit suspect on where this one's going. I don't think it's given us a move, identifier yet. What we want to see, I'm not really even interested in this until it either has a daily close above that 110.50 or a daily close below the 109. Okay, until it does that, not interested in really trading this. I know that's a decent range, and you could probably go to the smaller time frames and get a couple of scalps out of it. But to me, even the 1 hour looks a little bit messy. It's very, very wicky, and you can see that it's pretty hard to trade. It doesn't really show any examples. I think there's a lot better at the moment that you can actually get in, even on scalp. So we may see something move on this after the weekend, after the Jackson Hole symposium's completely finished and all of the important news is out of the way. It's a very big week for news this week. Maybe we'll start to see a movement, but this is not going to interest me until it breaks out of those two ranges, because even the sideways movement inside that is very wicky and spasmodic, really. If you look at it on the way, it's very, very ugly. Don't like it. And there's a lot better trades out there. So I think set your alerts for this one. Look for the shorts below 109 or the longs above 110.50 if you get a daily close above those levels. But until then, this one is not going to interest me. All right, we'll move over to the dollar index next. And we'll see that dollar index is starting to look a little bit strong off this key level here. Lightning bolts are still long. You can see on the daily, it's still definitely long. I'll blow it up a little bit. This is actually emptying the euro a little bit. We'll go to the euro in a second. It's rare that it does, but usually they're moving in perfect sync. But you can see here that this daily candle is quite strong compared to the previous two. Obviously, it's coming off a 50 and a 20 moving average. Both of them are very, very similar in where they are. So actually, sorry, this is the one that I changed over. These are a 26 and a 12. Let me change this back to a 20 moving average because that's our important moving average. I'll make that a 20 again because the 20 is always red. Okay, so as you can see, prices bounce straight off it. So I'll get rid of the 50. Actually, I'll make that a 50 again. So we've got our standard settings. All right, so as you can see, it's bounced completely off the 20 moving average and more importantly, a role reversal zone actually overlapping it. That is what makes this a really strong level because it's got a role reversal zone. It was resistance right through there and you knew that if it did come down, it was probably going to find support on the 20 because it has previously and it found a role reversal, which makes that level even stronger. Okay, definitely still in an uptrend. We've got lightning bolts going up on a daily, which is significant. Yes, we've got some MACD divergence, but I'm not really paying attention to that because it's on the time frame that I would be expecting this is going to go long anyway. So I'd be paying more attention to the smaller time frame divergences on a trade like this. So look, we'll move straight over to the euro because this is important because this has already moved. You can see that it's had a reasonable move up, sitting at around that 93 level off the 20 moving average. But when we move over to the euro hasn't really followed suit on the short. So you can see here we're on a daily chart. Okay, we've got I'll just put this on here. We've got a 20 moving average. As you can see, it hasn't really sold off. So it hasn't displayed the same short move that the dollar index did on the way up, which generally happens. So for me, this means that this is potentially even weaker than it looks. I think it's holding up a little bit stronger than it probably should. So what we want to be doing here, we know that the 20 is holding it up. So, nothing short of the dollar index breaking down that low is going to make this go up from here. So I think it's got more strength to the way down. We need to go to a smaller time frame. As you can see, very, very messy at the moment. But the minute we get a lightning bolt on a 1 hour, I think I'm looking at shorting on this one. So we want to see these moving averages get a bit closer together. They're not very far away now. If we get a 20 and 50 cross on the 1 hour and we get the lightning bolt that we want to see, I think that the potential for the euro short is there. The logical target is that, so 117, probably 10 area, even 117 flat. That's probably the target that it will go for first. I'm not convinced it's going to do that before we get any news releases, but if we are scalping, that's the zone I'm going for because it's a pretty easy scalp, really. There's not a lot of trouble in front of it. It's right at support now. If it breaks that support even by a little bit, it would need to do that for a 1 hour change of trend, then we are good to go for a potential short opportunity. Failing that, if it goes longer on the daily and the daily close above the 20, it needs to close above this whole level here. So we want to see a daily close above this peak here. If we get a daily close above there, I'd be convinced that maybe it's going to start to go long again. It might have a little bit more momentum. That's not the preferred trade because I think it doesn't make as much sense for what we're expecting from dollar strength. But if it does do it, we trade what we see, of course. So if we do get a daily close above the 118, then we're going to start looking at long opportunities to eventually get it down to or up to the 119, 119.50. Okay, so two ways to trade this one, but the preferred one is definitely the short. So look out for that lightning bolt and a break of that zone underneath, and a pretty easy trade down to the 117 or even 16.50 if it comes down with a fair bit of momentum. All right, we'll move over to the pound USD now. This one's been a little bit of an interesting one because it did break down past that support zone that we were talking about, and now it's basically got itself up and it's testing that support zone from above. I've been a friend of the pound USD for a little bit of time now, mainly because it looks stronger than its counterparts, being the Euro USD and to a lesser extent the Aussie USD. It's got itself up above that level again. So you have to respect that. You know that it is a support zone here. There's no question about that. It tried to break through, it went up, and it's closed above it. Now, what I need to be seeing from this is there's two ways to trade it. If it does close a daily above this level here, so above that 137.80, then it's lightning bolted up and it's looking to go long again. The problem with the long, and I don't like this for this very reason, is the minute it does go long, it's going to find another role reversal zone, resistance right in its face. So you can see the resistance is right through these levels here. So the minute it does actually close higher at this point here, it's going straight into a 200 and a resistance zone. So it's really hard trading for it straight up. It's not the preferred trade. If, however, it gets below the support level again and closes below this level here, which is around that sort of 135.80, if we get a daily close below there, we've actually got a lot more movement to the way down. And I think it opens up and actually plays into the dollar strength that we're kind of anticipating with the dollar index. So although it is the stronger of the majors against the US dollar, it's probably the one that's got the most potential as well. So what we want to be seeing is there's two ways to trade it, and I would probably err on the side of caution on the long. Even though it is technically a trade, I would be very, very cautious about taking that long until it breaks well past this zone. Once it gets past here, then it's a very different kettle of fish. Then you've got that the strength has returned, and it may more than likely get back into the 140s. But that's not the preferred trade at the moment. It's got to do a lot of work to get that done. The preferred trade is to actually break this support, close below the levels here, which is around that 135.80. If it does that, then we can look for shorts down to the 134. That's the preferred trade, but we've got the secondary trade if we get a big move of strength up above these levels here. All right, the last one we'll have a look at today is the Aussie USD. So the Aussie 200, sorry. We've got this one, and it has been trapped inside a zone of retracement. So we saw a big sell-off basically 2 weeks ago now. This is a daily chart. You can see that we've had the support come back in, but the support has been, dodgy at best, really. Like, we've had a lot of indecision here, a lot of conjecture. It hasn't really blasted up to, really to the new highs that the US 500 did. That just blasted straight to the highs again. This one hasn't. It's found, basically resistance right at the 50% mark. So if we drew a fib there, you're going to find a 50% retrace at this level here, and it is starting to sell off again. Now, that's not technically a flag, okay, because the flag is too long. It would have been a potential flag if it had broken around this level here, but at the moment the flag is bigger than the flagpole. So although it looks like a flag formation, it's too long to be considered a flag. But in saying that, though, a pattern's only a pattern on the price action that we're talking about. So it's important to really understand what the price action is trying to tell you. And it is actually playing out like a flag would, just over a bigger period of time. What gets me about this trade is that it did fall short, and the movements up have been very weak, if you like. It has traced itself up fairly slowly. The candles are all indecision candles. There's no real bodies here. All of them have been very indecisive. Even though you've got some long wicks, they're all really struggling. And this candle here has broken out of this little zone now, and starting to set a bit of a weakness trend for the 74.80 level. Now, ironically, even though it's not a flag, if it does play out how you would expect a flag to play out, it's going to go straight into a support zone, which was formed by that resistance here, which is a very likely target, and that's around that 73.50 area. And if you measure the pole, that's going to be the exact same distance there. So, you know what? Even though it's not a perfect flag formation, why don't we play it like one? Because it's going to play out with the same distance, and more importantly, it's aiming for the exact zone that you would expect it to go for. So what we're looking for here is, if you're not already in, because some people would already be in on this, I've already got emails, you want to see a 1 hour change of trend. So 1 hour lightning bolt on this if you're not already in. Look for a 1 hour break below these levels here. And if you get that, so what you want to see is a break below the 74.70 area, a 1 hour break below there, and we start aiming for that the 73.50 area. So on the daily, you can see this level here. The lightning bolt on the 1 hour will get us in on this trade. We'll be pretty happy with that. And then we'll try and trade it down to that level. Whether it's going to happen before the symposium or not, I'm not sure, but it could definitely happen on that news or early into next week. So this is the setting that I'm looking for. I'm not really looking for the long. Going into September, we know September is coming around next week. Seasonal weakness. I'm not really looking for a long here. It would take a lot of work to convince me to go long on this. In fact, it would have to actually set a all-time high again. It would need to make a lightning bolt from here and break higher. I would not be getting involved in the long here until it actually breaks this zone here. The short is far more lucrative, and that's the way we can play it. It can do both, of course, but the short is the easier trade, and it's the one that makes the most amount of sense. So that's the one I will be looking for. All right, so hopefully everyone's had a good week's trading. I think we've had limited moves, but they've been quality ones, especially on some of the ones that we've been looking at. So hopefully you were able to catch some of those moves. Have a great weekend. We'll let all this news get out of the way, and we'll work into the non-farm payrolls early. That's late next week, but early in the week we should see some of the ramifications of the news events from this week play out, and we've got our zones that we can aim for. And hopefully what we'll find before non-farm payroll is that all these majors reach these zones that we talked about today. Have a great weekend, everyone. I look forward to seeing you all next week.